Hey everyone, Nate McGee here, bringing you our video of the day. Today is Tuesday, November 26th, and it's 2013. What I have on the chart here is the Euro US dollar on our daily chart. And I wanted to just kind of bring something to your attention here. We've kind of been tracking this over the last few days. We're trying to figure out which way it's going to go. In the trading room last week, I did kind of say I was leaning more toward the bullish side of it, even though we broke the downside and through the trend line. Earlier last month, when we had the FOMC announcement and all that, it came back down. You can see we broke through this trend line right here, and we made these new lows, so we were able to adjust our trend line. So I have these two trend lines here. This is the most current one. This is the previous one that was broken through. And as you can see, prices have been constantly retesting it over the last few weeks here, and haven't really been able to move much higher than it. You can see we're also near a zone right here at the 35,602. And right now, we're in fair value. We're not in any significantly undervalued or overvalued prices or anything like that. So it has a good bit of leeway in moving in any direction, really. Now, if you take a kind of lean back a little bit, you can see that if we just disregard this low here where it was kind of consolidating, we haven't technically made a lower low. We're still in the pattern of higher low. From here, here's a higher low. This is still a higher low, so we could still see this head on up. It will have a little bit of trouble trying to break through here, which that's perfectly fine. But let me show you the reason why I thought it was a little more bullish. What I'm going to do is I'm going to pull up the wiki chart so you can see how that looks. Here's a couple of trend lines here. This is a pretty major one that we had right here across these lows that was broken through. And then we have another one here that we just recently drew. This is kind of the same thing we see on our daily chart. But what I have drawn around here in the box is basically a consolidation range. Now you see these little pops right here. Price came back down, it came back inside, and again right over here, came back inside. These are just fake outs. These little wicks here are fake outs as well. The more important thing is the closing price. That's what we're looking at here. And right here, you might consider this to be a fake out. But you can see how it gapped up here outside this range, and then went on up and came back down. And then when it did break through our trend line and made these new lows down here, we technically didn't really close inside there at all either. So that's pretty interesting. And then we opened back up, and you can see for that week we closed out at the high. And if anyone knows about the last kiss trade, you know we would have taken a trade once the market made a new high off this high here. You can see that's what's happened here. It actually made a new high, and you can see we have been steadily kind of climbing up. We haven't really moved a major amount because we will find some resistance here along this trend line. But you can also see how momentum right here is starting to strengthen a little bit. It's about to cross back over a little bit potentially, and maybe head on up higher to make a new high. So that's why I changed my outlook last week to a little bit more bullish, because I want to see how that closed out. And since it did make a new high, that's when I determined that I could see this continuing to head on up. So hopefully that'll help you out. We'll see if it does play out in this direction over the next few weeks. If it is, I'm going to be looking for some long positions here. I want to see it break through the trend line, especially over here on our daily chart. I want to see it make it through that trend line first. Then it'll kind of reassure me that we are going to continue on in the uptrend. So that's it for me. Hope you enjoyed it.